Welcome to This Explainer. Today, we are diving straight into the technical blueprint and the compensation plan of Polar Tensor. By looking directly at their own source material, we're going to map out exactly how they structure this platform. It's a really interesting setup because it combines AI algorithmic trading with a multi-tiered affiliate network, and we're going to break down exactly how those two pieces fit together. But right off the bat, before we get into the weeds, the source material explicitly kicks things off with a pretty critical disclaimer. They make it a point to state that cryptocurrency markets are inherently volatile and that independent financial research is strongly recommended for anyone considering participating. It's just a really important foundational piece of context to keep in mind as we explore the specifics of their model. Okay, here is our roadmap for today. 1. Introducing Polar Tensor. 2. The Polar One system. 3. Starting costs and fees. 4. The referral reward structure. And 5. Ranks, pools, and access.
Let's jump right into Section 1, introducing Polar Tensor, the origin, and the team.
This project actually started back in 2018. It was led by founder Felix Bick, who apparently had this deep fascination with patterns in international trade. That curiosity is what sparked the development of their proprietary algorithms. Fast forward to 2020, their Polar One system officially became operational, which really set the stage for their ultimate and honestly very ambitious target. They want to be the largest algorithmic strategy provider in the entire crypto space by the year 2027.
To actually hit that massive 2027 goal, they've put together a highly specialized team. Beyond the founder himself, the core group relies heavily on quantitative talent. We're talking about a chief technology officer, a dedicated mathematician, 3 AI data scientists, and a full DevOps team. It's very heavily tilted toward data and mathematical expertise.
Moving right along to Section 2, the Polar One system and the technology behind it.
At the absolute core of this whole operation is what they call a deep learning engine. Basically, Polar One utilizes multi-layered neural networks. They have specific modules set up for statistics, for live activities, and for data processing. Essentially, the idea is that it's constantly analyzing market trends on the fly, attempting to predict future movements, and then executing trades completely autonomously.
And here is a very specific number they highlight. According to their materials, this low-latency system has generated a historical average return of 22.04% since 2020. In the trading world, that is a highly specific and quite aggressive performance metric, and it's tied directly to their high-frequency algorithmic trades. Now, a crucial claim they make here is about scalability. They assert that their software is built to scale efficiently. The idea is that as more users and obviously more capital flood into the Polar One system, these deep learning models can supposedly compound returns without actually taking on any additional risk. They are aiming to keep the risk profile completely flat, even as the trading volume grows.
Okay, Section 3, starting costs and fees. Basically, your entry point.
So if you actually want to use the Polar One platform, you're looking at a minimum starting requirement of 100 USDT. USDT, of course, being a stablecoin pegged to the US dollar. So that $100 acts as your baseline financial commitment to activate the algorithmic trading on your behalf. Now, beyond that initial 100 USDT deposit, how does the platform actually make its money? Well, they take a performance fee from your successful trades, but it isn't just a flat rate across the board. It operates on a sliding scale. Basically, the more capital you commit to the trading system, the more favorable that fee structure becomes for you. Which brings us to Section 4, the referral reward structure and the affiliate mechanics. This is where things shift significantly into the network building side of things. If you choose to invite others to join, you basically tap into 2 distinct income streams. First up, you have license rewards. These are generated right up front from the license fees paid by the people you invite, and they pay out up to 3 levels deep in your network. Second, you have residual rewards. They build us as passive income, and it's a percentage drawn directly from your team's daily trading profits, which is then paid out to you every single Friday. And it scales up from there. As you climb the ranks, these parallel infinity tracks unlock, allowing you to earn beyond just those initial 3 levels. It splits into 2 different paths. License infinity rewards give you a percentage of all license volume across your entire network, no matter how deep. Meanwhile, residual infinity rewards give you a cut of your entire team's trading profits. And interestingly, both of these tracks offer an extra overhead bonus if someone below you manages to reach your exact same rank. On top of all that, the company takes exactly 2% of every single license sold worldwide and funnels it right into monthly global leadership pools. So, if you hit certain high-ranking qualifications, you gain access to these pools. You're effectively getting a share in the global revenue of the entire platform, not just the network you built yourself. All right, our final stretch, Section 5, Ranks, Pools, and Access. Let's look at the logistics. To actually rank up and get those higher rewards, you need a specific amount of what they call qualified volume. And that simply means the total sales your entire team has produced. Every single license purchased anywhere in your downline contributes to this overarching number. It is the absolute primary metric the system uses to figure out your standing within the whole organization. But, and this is a big but, you have to balance that volume against what they call the max leg percentage. This is a strict rule to ensure your network is wide and that you aren't just relying on one lucky invitee. The platform prevents you from just recruiting one highly active person and riding their coattails all the way to the top. You are firmly capped on the percentage of your required qualified volume that can come from any single leg or branch of your team. It basically forces you to recruit and build across multiple completely separate lines. So, the actual progression starts down at the iron rank, and you work your way all the way up toward diamond. Each step up the ladder requires hitting higher and higher qualified volume thresholds while strictly adhering to that max leg limit we just talked about. And successfully crossing those milestones doesn't just unlock those infinity pools, it also pays out one-time direct USDT bonuses as a sort of rank-up reward. So, if someone is looking to participate, how does it practically work? The onboarding is laid out in a few straightforward steps. You just access the platform via their web portal or mobile apps, you deposit your funds, and then you have a choice to make. You either simply let the Polar One AI run your trading autonomously, or you actively start inviting others to build out your reward network. To fund that account initially, they support the major Layer 1 coins, think Bitcoin, Ethereum, and Solana, alongside stablecoins like USDT and USDC. That obviously provides a lot of flexibility for users who are already holding digital assets. And they've also noted that credit card integration is slated for some time in the future. Now, what about getting your money out? Importantly for user liquidity, the platform promises round-the-clock automated withdrawals. You aren't locked into rigid withdrawal windows or stuck waiting on manual approval delays. Whether you're pulling out your AI trading profits or cashing in your network rewards, the system automates those stablecoin payouts 24 hours a day, 7 days a week. So, bringing it all together, you ultimately have to decide if this highly intricate structure aligns with your personal risk tolerance and financial goals. Polar Tensor explicitly links high-frequency deep learning algorithms with a heavily layered, volume-dependent compensation model. Remembering that disclaimer regarding market volatility from the very beginning of our explainer, the ultimate question really remains, does the promise of automated AI returns justify navigating the complexities of this multi-tiered network? Let me know what you think, and thanks for joining me for this explainer.